Hi, everyone. It's Gökçen from Venture. Today we are here with Alex Sanford Barros to talk about scaling in the US once again. Hi, Alex. It's nice to see you today with us.
Hello, how are you? Good morning. It's a pleasure to have you here. Pleasure to join your podcast. And then, so look forward to have a great conversation today.
Thank you so much. You have a really busy schedule, so maybe we can dive into the topic. Could you briefly introduce yourself?
Yes, I'm a director with the CFO Consulting Partners out of New York City, but I'm based in Austin, Texas. We provide a CFO advisory, we provide M&A, we provide turnaround to small, medium-sized companies across the U.S. It's revenue around from 10 to $150 million. I do teach finance at part-time, and I have done quite a few presentations. I am a former PwC. I have worked for General Motors, Coca-Cola, Cargill, and Business Bank Development of Canada. I'm a Wharton and Oxford trainer, so look forward to share the best value that I can here today.
Okay, thank you so much. Great introduction. As you know, many international startups see the US as the ultimate growth market. So from your perspective as a CFO, what financial preparations should founders make before entering to the country?
Well, taking an assumption that we have made a decision on the strategy side to expand international into the US. If you look from the CFO, from the finance side only, I think the number one requirement would be the capital, raising capital to expand into the US. When you're talking about raising capital, especially going to a different country, I think the number one criteria there would be, have the cost of the capital a little bit higher because you're taking extra risks there, right? So when you calculate the weighted average cost of the capital, the WACC has to be slightly higher. And then once to that perspective, you look at the cost of the capital structure, how you're going to raise the capital via debt or via equity. And once you have that approach done or decided, the best approach would be in terms of the capital budget, how I'm going to locate over the next, let's say, 12, 24, 36 months, or even 5 years, the capital that is going to be raised. And then from that perspective, you calculate the NPV, the net present value, the internal rate of return, which the IRR has to be higher than WACC, which is the cost of the capital. And then you calculate the payback time. So, and then you have the scenario analysis after that, the capital budget, you have the scenario analysis. And the scenario analysis usually have to kind of, ideally 3 scenarios to give a perspective, in terms of how can you navigate the uncertainties or the complexity once you move into a different market. And the last key element I would say would be the financial model, right? So in the financial model, you look at the income statement, the balance sheet, and the cash flow. And then from that perspective, you have the investment on the financial model, also the operation investment there, or the operation of the business itself. So when you look at the financial model, you look at, let's say, 3 years, 36 months there. Then you're going to be able to look at, the P&L, because you're going to invest in the capital. You're going to look at, have an assumption that you have a sales strategy, marketing strategy, and pricing strategy. You're going to look at in the horizon, how it's going to look like your sales, your costs, your expenses, your EBITDA. And likely you're going to look at the cash flow as well, report on the forecasting. And then you may say, Alex, why do I need a 36 months or 4 or 5 years cash flow? Because it does give you a perspective to say, do I need to borrow cash? When do I need to borrow and how much it is, right? You got to negotiate with the bank, so likely investors way in advance. And the third piece of the financial model is the balance sheet, that in a sense that, you're going to look at your investment, and then you're going to look at and reflect how is going to look like my balance sheet from the financial health perspective. If all my investment takes place, if I achieve my sales, and then I deliver the sales within the cost and expense that I'm expecting to. So overall, to finalize your question, you look at the capital requirements, look at the costs, look at the capital structure to look at the debt to equity there. You look at the scenario analysis, you look at the capital budget, and also the financial model. Those are the key financial elements to you before you're moving forward, before you expand into a different country, US, or can be in another country.
Okay, thank you so much. So what about financial mistakes that scale-ups or startups do when entering the US? What do you think about it?
It's very common. The biggest mistakes companies they do, they underestimate the capital requirements. That's the reason that I was, playing a lot of effort on the explaining the capital, raising the capital, because what happened is the companies they run short on cash quickly. Okay.
Mm-hmm.
So the ecosystem to navigate to do business in US can be complex in a sense that the dynamics of the is very competitive there. It does require additional of efforts in terms of capital and then dedication there. To answer your question, the companies run out of cash very quickly. They of course they try to deliver the best value in terms of I want to deliver the best services, the best products, so they start to hire too quickly, bring too many people quickly. The other one, they underestimate the environment itself. Can be costly to bring new clients in. Sometimes they don't price properly, right? So that kind of they underestimate the environment, how competitive it is. Although it's a wonderful environment, right? But it's very competitive. So depending, especially where you are, the what you're going to be selling there. Also, the U.S. employment and taxes environment that they lack the knowledge. So from that perspective, also can have a reflection there. Ideally, from that point on, right? So they can have some help from a tax accountant to advisors. And the last point I would mention that question is about where you're going to base the company. You're going to be based in New York City, in California, in Texas, in Midwest, like, can be. So it does have a reflection on the real estate. It does have a reflection. Talent acquisition. Can I find great professionals there, right? So depending on the location you are, has the taxes, labor laws. So it does change from state to state. So it can be very expensive sometimes in moving to California to open a business, or New York, but it can be better going to Texas, right? So or maybe Florida. So it's depending on the state you're going to be based, it has a reflection on the capital requirements and knowledge as well, right? So tax regulations and legislations, also your U.S. employment. So from that perspective, companies usually they underestimate those key elements there.
Yeah, okay, thanks so much. Great aspects for financial terms, really. But, beyond this, another key factor is having the right connections in there. So how important is building the right local network and partnerships, especially for founders in the US?
It's key element. I think it's crucial for you to go out there and meeting people. Like what I call in Texas, we call go out there and shake hands, talk to people. You meeting people. So we have some associations. One of them, a few of them, I can share with you. It's Association of the Corporation Growth, the ACG. Okay. You have the FEI, the Financial Activity International, which I'm a member. I'm a member of ACG as well. The CFO Leadership Council, which I'm a member as well. You have the chamber. Each city in the US has a chamber of commerce. It's very important for you and many others. It's important for you to become a member, to attend the events, the networking, meeting people, because eventually you're going to need a lawyer. Eventually you're going to need a tax accountant. Eventually you're going to need a recruiter. Eventually you're going to need an advisor, a consultant to help you with, let's say, taxes or US employment regulation, legislation, and so on, depending state to state. So, and it's important for you also to understand how the local culture they run the business, right? So if you're not familiar with the environment, it's good for you to it's great for you to go there, meeting people. They're very open, to welcome you to open a business and support you to be successful. So going out there and meeting people, build a network, it's crucial for you to be successful. Ideally, you should go there before I even start to establish the business, if you can, of course.
Yes. So if you were advising an international startup today, what would be your first 3 priorities during the first year of entering to the US market?
So that was a very interesting question. So the number one that I would say is about the capital, which I mentioned before, right? So the capital, the cost of the capital, you usually have to calculate properly. The cost is going to be a little bit higher. You have to look at, as I said, you look at the capital structure, look at the capital budgeting, you look at the scenario analysis and the financial model. That's number one. And number two, I would say it's about understand about your business model. Your clients, who's going to be your clients? What's your client segment's going to be, right? So also, what's your value proposition? How can you grow and create value? How the client's going to be buying your products or your services, right? So who's going to be your key partnerships there? Your suppliers, your networking that will be building. Who's going to be the key partners help you, supporting you to be successful there? And then also, I have the key resources, people that's going to be working for you, the technology that you're going to be applying at your business. Also, you're going to be looking at, besides technology, the physical assets and access to capital. In a sense, it's, along the way, you need access to capital as well. So those are the key resources there. And then you have the channels of communication. How I'm going to communicate with my clients? What's the best way to reach to my clients? That's kind of another key element as well. You have to understand quite well the revenue streams, right? How you're going to, what's going to be the source of revenue, your cost structure. Very important for you to not just to sell, but also have good control over costs and expenses as well. And then from that perspective, you got to be successful on that side there. And then you have, besides the chain of communication, you have, of course, the cost structure, the revenue stream, and then also the competitors. Who's going to be your competitors there? You have to understand what they're doing, how they're behaving, selling, and be successful there. You have to have a good understanding about the overall business model. That's number two. And number 3 point I would say is your risks. So when you move to a different country, you may face political risk. When I say political risks, I'm talking about the legislation, regulation. You may say, may face economic risks. Economics would be cost of raising capital, inflation. You may look at the social culture risks there, or trends, to ensure that you are aligned with the environment. You look at the technological, you look at the environment and legal risks as well. So that perspective, it does give you a good kind of, yes, I have assessed everything. It could be like, in your favor or against you in terms of the product you're selling there or the service you're selling. So how you overcome if you have any challenge there, right? So you may look at your SWOT analysis, right? The strength you have, the opportunity you have, the weakness and threats, how are you going to overcome that? At the end of the day, when you move into the different country, the goal number one there would be align your business model where you're selling the products and so on, the service with the country growth model, right? So if I'm moving to the US, if I'm expanding to the US, do I have all what I need in the US, right? Do I have access to capital? Do I have access to investors? Do I have access to the banks? Do I have the buyers there? Is it like the demand is strong? So all the expertise that I need is going to be easily able to find there. So that's kind of the element. The number one or the key element there is the alignment between the business model that you have in your business and also the growth model of the country, right? So you got to align those two, and then that's going to be one of the key elements for you to be successful. Again, number one, the capital. Number two, the business model. With all those key elements that I mentioned, I think there are around nine key elements, and then also the risks. And then when you look at all those risks as well, you're going to be able to navigate and mitigate potential risks you face. And then at the end, you're going to be able to say, is my business model aligned with that country growth model?
Mm-hmm. Yeah. Thank you so much. It was like a lecture from my side, to be honest. So thank you for all the great advice. I finalized my question. It was my last question. So thank you for your time. I really appreciate it. So
pleasure mine. I'll be here at any time if you have any other question, okay?
Okay, thank you so much.
Thanks. Take care.
Great to have you.
Bye-bye.
Bye-bye.